You've all read that we have a pretty tough IPO environment right now, and deals are still getting done, but at the end of the day, I would say the investor community is a lot more discerning and a lot more discriminating about the companies that they will give capital to as they emerge in the public markets. And whenever we have an environment where there is either uncertainty or surprise, the two things that the market hates, you're always going to have a pullback with respect to risk appetite. And when there's a pullback on risk appetite, you will see it directly impact the IPO market.
What stands out to me is really what's going on. A big trend is the formation of private capital and unregulated capital. So we've had unprecedented central bank intervention around the world. We have a lot of cheap money, but at the same time in the US, we have massive bank regulation. So banks are pulling back. So what we've seen is new players come into the market. Hundreds of middle market direct lending companies have formed. BDCs, business development companies that raise public equity and leverage that to make loans to middle market companies.
Historically, private equity, you're looking at, people need exits and liquidity in 3 to 5 years to return to their investor base, their LPs. And now we found that there are situations where we want to, great companies, where we want to hold for a longer term. We don't want to just flip it in a few years.
It's a journey. This is a long, long journey. I expect to spend 10 years with an entrepreneur I fund if things work out perfectly, right? So everything matters. The person matters. And, it's got to be a holistic decision.
What are some of the mistakes that people make when they are thinking about raising capital? And the first thing that I thought about was valuation. And when you are thinking about raising capital, please, please, please have a very clear idea in your mind of what you think the business is worth.
I'll agree to your price at my terms. It's a very dangerous thing for you.
So be careful about the liquidation preferences. Be careful about the rights in terms of what they can say yes to and what they can say no to, they being the investors. And make sure that when you go into that conversation, you have a really good idea of what's the low case valuation, what really is the base case, what's the fair value of this company, and what really is sort of that outlandish number, and what am I willing to give up if, in fact, there is the bidding war that he talked about and I get an opportunity to get that number. What do I want to make sure that I maintain control of? So be very careful about that and be very clear about what those numbers are before you go into that conversation.
I always say I need 5 things to make an investment. People, 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 a great idea, and a huge market if it works.
What we are doing is evaluating management teams, going in, looking at a company, and seeing, can this management team deliver on what they've put in front of us and that strategy, and is that the right management team, and can we back them? Do they have the right track record historically, and what are they saying about the future?
The reason that you do a roadshow is so that the potential investor can sit across the table from you and look you in the eye and make the assessment, will this management team deliver on the forecast that they are talking to the market about? Or are they going to disappoint the first quarter out of the box?
I've talked to way too many entrepreneurs that got the wrong investor and they don't see eye in the business, and it stunts their growth later, right? So make these other capital providers compete on other things besides the terms and the price.
It's a two-way street. Like, we evaluate management teams. You need to evaluate investors. What does that investor need, and is that what I need? Because if you're mismatched, I can tell you from experience, it can be a very painful and unfortunate place to be for everybody involved.
Talk to the companies that they've already funded. How was he as an investor? How active was she? Were they in your hair every single week? I mean, you can get some investors that give you good valuation, fast money, but at the end of the day, they are calling you 2 or 3 times a week, and you don't have time to do anything else. And then your whole obsession becomes, how do I get them out?
The only true secret to entrepreneurship, in my opinion, as someone that spent 25 years as an entrepreneur, is tenacity. Your refusal to give up and to die is what allows you to succeed where others do not.